Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Friday, and the market has gotten clobbered once more. It looks as if the Nasdaq fell for the third straight day. Can you believe it? Nasdaq has been falling, and just overall, it's been a tough market to trade. I've sold off a lot of my issues. I did take some profits yesterday, and then I have been selling today. I do think that we're going to take a turn lower. So let's get into it. Let's get into the slides and kind of deal with what we've got. Basically, the traders are really increasingly worried about the Fed's aggressive approach. And I think this is likely to go on for a while because the Federal Reserve has to raise interest rates. That's just the long and the short of it. It's going to have to raise interest rates. Of course, that kills the tech market, and it kills the Nasdaq Composite. So, the U.S. economy is primarily consumer spending, 3/4 of it. So, if interest rates go up and prices go up and inflation goes up, unfortunately, spending goes down. And when that does happen, then we see the market move lower. So I definitely think that's going to be the case, at least for now. At least for now. Let's take a look at the Nasdaq here, and that will give us kind of an idea of sort of what we're talking about. It's the third straight day for a pullback. We are currently below that 13,000 level. Right now, that's a critical level because that whole number that means we're probably going to go lower. Right now, the Nasdaq closed at 128.39, so we're below that critical 13,000 on the Nasdaq. So definitely, we're all the way down here, basically to about 12,846. So it does look like we may have an update on Monday, but then it's probably going to move lower, lower than that. There are going to be some good opportunities to potentially short stocks. I'm looking currently at a potential on Disney. I haven't yet completed everything on it, but I kind of wanted to get it on your radar there. We may have something to do. We may have something on that one. So we definitely, with the overall market basically looking like it does. Disney is going to be a one that we want to look at potentially for a short. I haven't done everything on this one yet to get it ready, but I want to show you the chart, the live chart on Disney. They're in a situation with the state of Florida. They're having a lot of issues with the state of Florida, and it does look like this is going to push the stock lower. As you can see, it's already moved lower. I do expect a bounce on Monday. I do expect it to trade up a little bit, but that's probably where I'm going to be shorting it with a bear put spread. Probably expecting it to come down to about 112 or 113. That's where I'm expecting it to move within the month. So I do expect this one to move lower, and I will have a trade on this one hopefully on Monday for everyone that's out there. By the way, if you want to get on that list to see what that trade is going to be, super easy to do. Just go to www.dallastradingfloor.com, first and last name, and we're going to send this out to everybody who's on the list, just as as an idea, a trading idea, not a recommendation or anything like that. But I do expect that we're going to have some pretty strong movement to the downside after this. So that's one you might want to kind of look into. We do have some strength also in two stocks that I was looking through today. I don't own either of these, but I think that we may have some strength in both of these. These are both in the oil and gas area. Just wanted to kind of show them to you really quickly. One is called Viper Energy, and this one, this one is up after hours. It's VNCM is the symbol. So let's look at that one really quickly. VNCM is the symbol for this one. This one I do. Well, did I get that right or not? Let me just see if I did. VNOM. I'm sorry, VNOM. Golly, I need to get some better glasses. VNOM on that. This is Viper Energy Partners, And it's definitely one that I don't own it, but I'm looking at it as a potential buy. The reason why is that it is in the right area of the market. The U.S. E&P market. This is the oil drillers. The way this trades is it pulls back down to that 50-day line, and then it pulls back again. It's just pulled down, so I expect a bounce here, and we will see. I don't own this one currently, but it's one that you might want to put on your list as a potential, as a potential one to buy, because it does appear that it's pulling back very, very nicely. So the symbol on this one is VNOM. That's the symbol on it. So definitely put this one on your watch list. I think that it might work in the near future. We'll see. I'm going to look at it on Monday again after the weekend, but I do think that it is in the right area of the market, and so I'm looking to go short on some of the Dow stocks like Disney, and then go long on some of the other oil and gas stocks. There's another oil and gas stock that I think is setting up particularly nicely, and this is Petrobras. This is the national oil company of Brazil. The symbol on it is PBR, and it is set up pretty well. I think that with all the turmoil in the world, they are likely to be a good potential buy here as well. Here's the live chart of it. It is pulled back again below the 21-day line. Don't normally like to buy them here, but I do think that we're going to get some strength here based on this. This is a very, very cheap stock. After hours, it was up just 2 cents, not a lot, at $13.90. I do think the prospects for this are pretty good. It's got a good checklist, 78%, and it's in the right area of the market. Basically, the oil and gas, the integrated oil and gas companies. And this is one I think that is setting up very nicely and is potentially, it is potentially a buy. And the symbol on this one is PBR. So that's one you might want to also put on your watch list, PBR. And this one might work well for you as well. All right, let's see. Here's the small portfolio. This is, as you can see, there's a lot less names here. I was definitely sold out of a lot of names. I took profits, and I have, as you can see, I'm mostly in cash right now on the small portfolio. I'm 53%, actually 54% in cash right now after selling off most of my other positions. The only positive position I have currently is American Homes for Rent. This is one of the REITs that I was telling you about yesterday. The symbol on it is AMR. So let's look at the live chart on that one. I'm sorry, not AMR, AMH, excuse me, AMH. It's American Homes for Rent. This is basically a company that benefits from the inflation. And basically they own about 57,000 homes in the United States, all 1 to maybe 10 years old. And so this one also is a potential, it has some potential. It did pull back a little bit today, but it is still in the buy zone. And I want to reiterate here, it's got a very strong checklist, 89, only one off on that. And it does look like, technically, it looks pretty decent. We are just basically right at the 10-day line. We're just 1.49% above that 10-day line. So it is potentially viable at this level. It is viable at this level. So the symbol on this one is American Homes for Rent. It's AMH is the symbol for American Homes for Rent. So this is one you might also want to look at. I think it has potential. I think it has potential. Getting back to the small portfolio, you can see again I'm mostly in cash. I do have a little bit larger position. I have about two positions in American Homes for Rent. Remember, when you're doing position trading, it's think of your portfolio as a pizza. Divide it by 8. That gives you 8 full positions. I'm about two full positions in American Homes for Rent. It's my biggest ownership right now after the sell-off with today's market, because it did sell off pretty darn hard today. And I also show you all the other stocks that I'm in. everything was down today. Basically, American Homes for Rent was down, not a lot, about 1.29%. Then also Novo Nordisk down just about 5 cents. Shell was down. Rexar, this is the ETF that is in the industrial warehousing space, primarily in the Southern California area. It's doing fairly well. It was off today. We were down on CubeSmart. This is another IRA. This is another ETF that I'm in as well. Cheniere Energy, this is the liquefied natural gas company. That was down. And I'm also in Raytheon. That was down as well. So overall, a very tough market to trade right now. It's been just very, very it's just been very, very sloppy. It's just a tough market to trade, and we'll hopefully next week we'll move to some better things. I'm working on a bear trade for Disney. I think it's ripe for that. I also am looking at possibly establishing a position in Petrobras PBR. That's the symbol for it, and also in Viper Energy, the symbol on that, VNOM, like Venom, those two. So without further ado, let's get to your questions. Thank you for a happy Friday to everybody. And what is Jay saying here? Let's see, Jim, will each share of Twitter be worth $54.20 if Elon's successful? Well, that is a good question. Not necessarily. And this is the hard thing. The thing is, it may, if he takes it private, basically the way it's going to work is, if you have stock now and Elon acquires 100% of it, which I think he might. So right now the stock price is $48.57. Now, if this goes through and he does acquire everything, then you would get paid cash $54.20 for that, so that you would have a margin on that. You would have a margin on that, and you would make basically, let's see, so that would be $54.20, and then the current price $48.60. That's the current price. So if this did go through, if this did go through, you would be getting a $5 and if this did go through, you would make $5.60 on the buyout. And of course that would be in cash. So you would wake up, and what would happen was that you would have sold your shares, getting the $54.60 price. So you would make $5.60 on that buyout. But of course that means that it would be a cash offer, and I don't know exactly what the details are going to be, but basically if the board accepts the offer, the stock will be bought for that $54.60 price, and of course the difference between that would be that would be that $5.60. So that would be your gain on the sale of the shares. Now, of course, you would have to buy these like on Monday, and then if that were to be the case, then you would get that full amount. You get the amount that you paid for the shares plus the plus the additional back. And of course, then the company would not be listed; it would be private, and that's sort of how it would shake out for that. So right now, each is about 49. Right, exactly. Well, it's a 48.60 is the price I have. See, this is the live chart here. 48.60 is what I have. So there you go. You would make a little bit of a margin on it. That's if it's accepted. So we don't know if it's going to be accepted or not. So it's just up in the air on that. Absolutely. Going over to TikTok. Thanks for this comment here. And you're saying 419 on the spider by Monday. Let's look at the spider. Of course, this is the ETF that tracks the S&P 500. So it has also been taking a lot of damage, as you can see. I mean, it's taken a lot of damage here as it's moved lower. It's below that 200-day moving average, and it's below 440. So I think it's fairly likely that it could be. It's currently trading at 426.39 after hours. And the question is, can it move below 420? I think 420 is where you want to look for it, but I definitely think it could if we have another day. I do believe that we're probably going to get a pullback. More so than we've got. I kind of am feeling, at least in the market, I'm kind of feeling to see if if we're going to get a further pullback. So let's take a look. I'm going to look at the direction of the market here. And all I'm doing here is I'm just pulling up investors.com, and I want to show you kind of an interesting thing. If you can take a look at this and you're on the site, let's see if it'll let me sign in. All right. Okay. There we go. Okay, we did have a change in the direction of the market. No surprise here, but I want to show you this. This just kind of came in. I want to show you this on the market here. We do have a change to a correction. So right now the market has moved to a marketing correction. So we want to, and I kind of expected this was going to happen, and this has definitely confirmed it. So the market is in correction. So I'm going to probably put this out to everybody on the action trade alerts, but the market is in correction right now, and it has moved to a market correction. So what you want to do in a market correction is you want to start selling your positions, moving your stop losses up, take any profits that you can, because it's going to move lower. And right now we're going to get ready possibly to short the market. Again, I haven't totally come up with a short list, but the basically, this is pretty much an indiscriminate market. It's taking just about everything along with it. So we need to be very cautious. What I'm going to be doing is moving up my stop losses tonight, just so that I will get out hopefully with a minimum problem. I have been peeling out of the market. I sold quite a bit yesterday, and then also this morning. So that's kind of the way it's been. But right now, you definitely have confirmed that we're going to go to a market correction. So that's definitely something. Is the bear market confirmed? Well, I don't know if at least in the short term it is, because we have moved to a market under pressure in correction. So that has been confirmed. That is confirmed that we are in the market under correction. All right, let's take a look at Justin's question on P&G, Procter & Gamble, and see if we can pull that up here. And the Procter & Gamble. And, this usually is when the market is in trouble, this is usually the sort of the safe haven, are these consumer staples. But unfortunately, that's not been the case today. This is the second day that it's been down. I do think it will get some support right here at the 21-day line. But overall, the market is going to take a lot with it. The 21-day line is at 157.81. So that's where the 21-day line is. And I do think that we are probably going to move down to that line. So the way I think it's probably likely to get support is at this line at for PG 157.29. So that's the 21-day line for PG. So that's kind of where that's kind of where you want to look as sort of your line in the sand. There is right about here. if you're already owner of it. This is probably going to go lower, even though it has this consolidation here. I do think this is going to pull back and probably to the 21-day line and possibly to the 50-day line. But unfortunately, the the look on this one is downward, at least for now for P&G. So thanks for that question, Justin. Really appreciate it. Let's look at Starbucks. Where's the next support level? SBUX, of course, is the symbol. Retail is going to be tough. Retail restaurants in particular, and this is not a good chart. As you can see, we have a downward trend here. This stock has been in trouble really since January of this year. I mean, it's really sort of taken a movement down. The question is, you want to know where the next support is. Here's the thing: instead of looking for a support, wait for what's the prudent thing to do right now, unless you're shorting it, is to possibly sell it. I would sell it here. Remember, it's not a good idea. It's just not a good idea. If you're down more than 7% on on this, you just need to be careful. So never let a stock move against you more than about 7% from your buy price. If you're down more than 7%, really, I think the thing to do here is to sell it and then wait for better conditions, because unfortunately, with Starbucks, it's likely to go lower. I mean, based on this chart that I'm looking at, I don't really see a lot of support here. I think it's going to go lower and possibly a lot lower. Now, let's take a look at the monthly chart. You see, I'm going here to the monthly chart. The support right now for Starbucks, basically, if you look back in history, is at about the $50 level. So this could fall easily. This could fall easily another $25. So really, the next level of support that I'm actually seeing on this stock is support at about $50 per share. And the reason for that, of course, is that I've gone back to the historical chart. I have taken the lows. As you can see, it touched the low there. It's the low there, and that's where the support is potentially for this. I just to find when we're in a downward trend, which we are now, and we have moved below. We've moved below that 200-day line. The next level of support is probably down here, right at about 50, as you can see. So not a great look for Starbucks, unfortunately. Just not a great look for Starbucks there. So let's see if we can take another question from TikTok. Thanks for everybody. Bloodbath today. You're not kidding. Hey, thanks for watching me from Switzerland. By the way, if you want to see these charts, super easy to do. Just go to my profile, click on the link, and you'll be able to see the live feed from YouTube. And I'm showing all the charts on YouTube. So hello from Switzerland. What platform are you sharing the screen on? Zoom? No, unfortunately, I'm sharing it on YouTube. I'm sharing it on YouTube. So the easiest way to see the screen is to go to YouTube, and I have a live broadcast. You just go up here to the link, click on that, and then you'll be able to see the live feed for YouTube. I am on YouTube on this one. So if you want to see the charts, go to YouTube. That's the easiest way to do. What do you think about CRISPR for the long term? Well, when you say for the long term, that means that you've lost money in it already. So I don't want to. You should remember always, if you're down more than 7%, do sell. I know it's tough. I break this rule all the time myself. But what I'm doing is I'm putting up the chart of CRISPR Therapeutics. This is a very interesting company. They do gene editing, and very interesting. They use the mRNA technology. But this one is obviously in a downward trend. So is this a good stock for long term? I wouldn't be buying this. I would wait until we saw a reversal on this. So for right now, I just don't think you can own it. I would have it on my watch list, though, because I do think that this is revolutionary technology. But what I do see is I see this consolidation right down here. So it's got a ways to go. I think it's going to fall basically to about 36, and then we possibly will see a bounce on it. But right now, if it moves below 50, which it very well could, if it moves below 50 right here, the next stop is unfortunately about 36. So not a good stock. Instead of losing all the way down here, sell it now, put it on the watch list, and then that might work better for you. It's just not a good look when it comes for that. What about the TQQQ? I would not be buying the TQQQ right now, because remember, that is the leveraged QQQ. So if the QQQ goes up, the leveraged QQQ goes up twice that. So I would not be in that. We are in a falling market for the Qs right now, so I would not buy the TQQQ. And we'll take a look at it on the screen here in just a second. But as you can see, we are in this downward trend on the Qs, and the TQQQs, it just falls a little bit faster than the QQQ. So this is the TQQQ here. Now let's go and look at the QQQ, and you can see it's the same kind of action, except it's not as dramatic. The TQQQ, of course, is a leveraged ETF, which basically, if the Qs go down 2%, the TQQQ typically goes down 2% because it's leveraged. So I would stay out of the TQQQ for now because the Qs are going lower. So I would steer clear of the TQQQ. I just don't think it's worth taking the risk of it going further down, because I do think it probably likely will, now that we have moved to a market in correction. All right, let's see. Does Silvergate Capital SI look good? Probably not, but let's take a look. Silvergate Capital, not really. Not really, unfortunately. Silvergate Capital it doesn't look all that great. I'm looking at the weekly chart here. We're in a downward trend on it. So I couldn't be a recommender of that. Let's, I've been focusing on the doom and gloom. Let's try to find something out there that is working today. There are a few RS blue dots that I'm going to take a look at here. There's about 17 of them, so there might be something that does work, and I'm going to try to take a look at some of those. Let's see if I can. There we go. So, all right, let's take a look at some of the let's take a look at some of the blue dots to see if there's anything that we can see that is working. Let's see if there's anything that is working. This is okay. Let's see. Let's go over here, add, and what I'm going to do is I'm just going to flip through these really quickly. This is Curtis Wright. No. What I'm doing is I'm looking for companies that are potentially breaking out. Sinclair Oil, that might be a breakout. McDonald's is looking decent. Mark and Company. Permian Basin Realty Trust, that may be a potential. What I'm doing is I'm just going through here and screening. Interesting. J.M. Smucker. This company did very well during the Depression. It's a very old company, and interesting chart on it. Let me just see if there's any kind of thing on this one that might be working right now. The checklist is okay. The market's pretty good. Relative strength is moving up. For an individual stock, this one isn't bad. You might want to put this one down. J.M. Smucker, it's SJM is the chart symbol on that one. I can put that up right now. That is SJM. This is J.M. Smucker. This one might be a potential. This one, oops. This stock has been around for over 100 years, and this typically does well in depressions. J.M. Smucker and Company. So definitely, I've studied this stock. It's not a bad stock, and they make jams and jellies, and everybody seems to like that. So let's take a look at Facebook and see if there's anything there we can look at. Boy, Facebook just looks horrible. It just looks horrible. Look at this. Yeah, this is going to lose support right here at the 180. This should also be on your short list as a potential short. This rallied up to the 200-day line. It pulled back. Let's see if there's another rally. If there's another rally, this will be shortable. So right now, I think we've got to be very cognizant of the fact that Facebook, or Meta Platforms as it's now called, is shortable. So I would not invest in this thing. It does not look very good. All right, we got a few more questions here on Friday, and let's see. Okay, we did that TQQQ. All right, let's see if we can. Yeah, Bloodbath Day, absolutely. Thought Amazon 2,400 puts before earnings next week. Okay, let's look at that. Let's look at puts on Amazon, AMZN, and this is going to be prior to earnings. So what I'm going to do here is I'm just going to look at the daily chart really quick. Hopefully there we go. And I'm going to pull it over to the daily chart for Amazon. 2,400 puts, boy, you know what? I wouldn't risk that. For me, I think the bottom of the consolidation, the bottom of the consolidation is, I wouldn't know. 2,400 puts, I don't think so. I don't think I think that I don't think that. I don't think that's a good move. I think that's too low. I think you need to be at 2750 puts. That might be a good one. 2750, right about here. That's where I'd consider it, but I probably wouldn't do puts. So I probably wouldn't do puts on Facebook right now at 2,400. I think it's too low. I think you'll get put too, because I don't think it's going to fall that much. I don't think it's going to fall that much. Unfortunately, we should All right, let's see. Can you chart? Yeah, absolutely. I can show you SPY support, but you're going to have to jump on over to you're going to have to jump on over to the YouTube channel. Very easy to do. Just go to the profile, click on the link, and you can jump on over there. But let's look at the spider and take a look at support for it. SPY, of course, is the symbol for that, and I do think I'm going to go out here to the weekly chart because I think it's easier to see. Part of the issue is that we fell below that. We fell below the 50-day moving average. So the question is, where is it going to move? Right now, the support is right about there. So it's about 400. It's about support on this one right now is about 410. So that's kind of where I see the support for it is about 410 for the spider. We've pulled way below that, as you can see, and I think we're going to get a bounce here. But this is where I see support for it. I'm showing this on the charts on YouTube, but this is where I see support on it at about 410. We are currently, well below 440. We're basically at after hours 424. So I see support at about 420. So I think it's got about another. 15 points to go, 15 balls to go down to get to support on the spider. So I see support for the spider at about 410. So that's kind of where I see it. So support on SPY at 410. So that's kind of where based on the charts, that's kind of where I see support for this one. All right, let's see if we have any more questions. Thank you very, very much. Oh, let's look at Chevron. That's a good one. Thank you, Satish. Appreciate that. Let's look at Chevron, CVN. This is one of the areas that you should be looking in the market because the integrated oils have done well, and so Chevron, CVX is one of the biggest oil companies in the world, and even though it has pulled back here a little bit, it is still very strong. There is a bottom of the consolidation here. Basically is, and I'm just going to see, this may fall a little bit more, but I think it's going to get some support. Basically right about at 158. So we're at 160. So right now, I do think that there's going to be an opportunity to buy this. We do have the RS line moving up. I do think there's an opportunity to buy this. I'd wait for the pullback to about 158. That's kind of where I see it getting some support. So I would say wait for the pullback to 158, and that's kind of where I see some support. That's where I see you can buy. Oh, that's the spider. Let's see. So I think that you can make sure that's in there. Yeah. So basically, I think you can buy it basically right about a little bit below the 50-day line, but right about here is where I think that it's going to get support. Right now it's at 160. 158 is kind of where I see support. So thank you for that. That's a great question. Let's look at some of the other big integrated ones. Let's look at Hess. I took profits on Hess. I've been looking for a chance to get back in. The symbol on this one is HES. It's a smaller company than Chevron, of course, but it is an integrated oil company, and it essentially has the same pattern, as you can see. Part of the reason for this is because one of the biggest buyers of this is the Spider Select Energy Fund, SP, the Spider Select for this one. So this is looking similar, a little bit cheaper stock. Let's look at ExxonMobil, XOM. That's one of the other big integrateds, of course. Same kind of pattern, totally same kind of pattern. I do think we're going to see some support here. So with Chevron and Exxon, I think that you might want to take a look at Exxon right now because it is in a pattern that is potentially viable right now, believe it or not. I never thought I would say that about about Exxon. But Exxon may be viable. If we get an up day, if we get some support, Exxon may be viable. So those are the ones you kind of want to be looking at to buy. Well, thanks, everybody. Thanks for taking a look at the show. I'm going to be back, of course, tomorrow on Monday at 5 o'clock with everything good. Also, let's see, do we have one last question? Let's look at, wait a minute. Here we go. My cost on Facebook is, okay, good question. My cost on Facebook is $154. Should I add or should I sell? That's a pretty good. Let's look at Meta here. You know what? I would sell. I would sell this one, George. Thank you very much for this. This is a good question. Here's the thing. Try to calculate the amount. Try to calculate the amount that you have profit. And then I would sell everything and I would just ride on the fumes. So here's what I would do. I would sell the amount of shares. If you have an average cost of 154, what I would do is I would calculate the amount of profit that you have. Then I would sell everything, all your shares, and just have a profit, just use the profit to run on. So I do think that Facebook is going lower. I really do. So I would probably be, I'm going to be, I would lean on the side of taking profits right here. And because I do think it's going to move lower, but because you have a cushion, you can definitely ride on that cushion. So what I would do, I would sell everything that I had up until where it started to make a profit, and then I'd possibly carry that. So that's sort of my take on your position. But great question. Thank you so much for that. All right, Jay has a question on Coca-Cola KO. This is the ultimate Warren Buffett stock. I think he's held it for like 50 years or something. I don't know. Long time. KO. And let's take a look. Consumer staples doing well. And it's up. So everybody is moving to safety. So this one, 65.40. So it's looking very good. It came out of this nice base. And look at this relative strength line. I don't know if it's viable here, but boy, this chart is just showing us how strong Coca-Cola is. Yeah, it's got a relatively mediocre checklist, but everyone's looking at this one for the profits. So, could you buy it here? Well, it is extended. That's the only thing, but it does look like it's very strong. So in a down market, this is one of the few stocks that's going to do well in a down market. But right now, KO is extended. So you really can buy it. You really have to wait for a base to buy this one. But it's a great stock, and it's definitely proven it. I mean, when the market gets in trouble, consumer staples are the ones that's where it goes. So that's definitely where it goes. All right, let's look at IRT. Let's really look at that IRT. Take a look at that. Independent Realty Trust. Okay, this is an area that I do like in the REITs. I definitely like the REITs. Thank you for bringing this one up. This is a little bit extended, but it is looking fairly good off the 21-day line. We're above the buy zone. The buy zone, the last buy zone on the cup with handle was at 24.60. We're currently at 27.68. Could you buy it here? Well, you know what? Normally I wouldn't buy it at this level, but I do like the fact that it's a REIT, and I do like the fact that we're in this sort of consolidation. So coming out of this consolidation, I think you could buy this. But I would try to start with a relatively small position. I would go possibly with a 1/2 position. That's kind of that. That's kind of where I would go. Possibly a half position on this one is what I would look for. Possibly a half position on this, but it does look good. I like this group and I like this area a whole lot. Well, everybody, thanks for taking a look at the show today. I'll be back on Happy Friday for everyone. Thank you, G. Appreciate it. I'll be back on Monday at 5. Happy trading, everyone. Be very careful. We're going into a market in correction. Take your profits now, and then we're going to find some good shorts so we can make some money on the downside. But the market is moving lower. Reduce your exposure. Try to go to mostly cash, and we will have some good opportunities. But we want to reduce our position, go mostly to cash, and get ready to short because, unfortunately, the market is going lower. And we have to get ready to take advantage of that. And the way you go short on the market is a little bit different than you go long. So right now, reduce your position sizes, go to cash, and take your profits now. All right, I'll see you back here on Monday. Thank you so much, everybody. So enjoy the show and everybody's questions. And we'll be back on Monday. Happy trading.